My talk today is going to be about silver breakout. So Jordan certainly gave a great intro, and I'm going to elaborate on that. Silver breakout, but again, are you positioned for it? Here's a quick thought. There are decades where nothing happens, and then there are weeks where decades happen. Now that's attributed to Vladimir Lenin, not exactly my hero, but the question mark is next to his name because I can't find any conclusive proof that he said it. Someone apparently has said it, but it's apropos, so I'm repeating it. I feel like that's what the last couple of months have been like. It's just been an incredible ride, and I think, like Jordan said, there's a lot more of that ahead of us. Now the serious stuff. Debt globally and the kinds of things that are going to drive precious metals, and I think that are really at the root of what's going on. Global debt is, despite high interest rates, that making borrowing more challenging, of course, central banks letting their purchases of treasuries over the last few years to stimulate roll off the balance sheet and not renew them and just sit in cash when they mature, still has us at debt levels globally that are above pre-pandemic levels. So that says a lot about where we stand right now. Debt to GDP levels are still rising. That's certainly a function of interest rates, high interest rates. And so if you notice on this chart, you've got the lighter blue and the lighter red, and that's the projections that we had, the World Economic Outlook projections in 2019 of where we would be at this point in time. And then the darker red and the darker blue are what really happened. So needless to say, we've blasted right through these debt to GDP ratios. And give you an idea, in the 1970s, the debt to GDP ratio was about 35% in the US, and we're at about 120% right now. So to think that you can keep these high interest rates for extended periods is just dreaming. The advanced economies see their debt to GDP ratios climbing not quite so quickly as the emerging markets. I'm going to talk a little bit about the implications of that in the next couple of slides. What we see too is that growth is slowing. So there is growth, but that's come from a lot of stimulus. Emerging market growth has slowed the most. You've got developed markets that have seen their economies grow, but that's on the back of a ton of stimulus. Overall, worldwide growth has clearly been slowing. Certainly, high rates have had a lot to do with the slowing, and this leads into something called black swans. By definition, of course, they're not predictable. But if you think about what could be the next black swan, there are a couple of really obvious things come to mind. You've got banking crisis that has not gone away. Just a few weeks ago, there was another bank in the U.S. that went under, Republic Bank, I believe, out of Philadelphia. So last year we had three or four at least major banks in the U.S., and then you had, of course, Credit Suisse in Switzerland. This is not over. A sovereign debt crisis is certainly something that is on the table. The Council on Foreign Relations tracks this stuff, and they have, in fact, about a dozen countries right now that are officially in default, including Russia, Pakistan, Sri Lanka, Ukraine, Venezuela, and Egypt. And they're actually, they track the different countries that are at risk, and very high risk countries are at a record number right now, with 12 countries making that list. So it's certainly not looking very reassuring on that side of things. In the U.S. alone, debt is at $34 trillion and counting. And research by Bank of America strategist tells us that every 100 days, the U.S. is adding $1 trillion to its outstanding debt. It's just incredible. So that's $3 trillion this year alone, probably even beyond that. And now this is interesting as well. If you look at if there is a cut in rates, the U.S. deficit this year is going to reach $1.2 trillion. If there is no cut in rates, if there is no cut in rates, it's going to reach $1.6 trillion. So there's something called a debt spiral, and that is when the deficit grows so much because there's so much borrowing just to pay the interest on your debt that your deficit just adds so quickly to the size of the outstanding debt, you end up in this debt spiral. And that's basically doom for a country facing that kind of situation. And it's leading to this. We're at a point now where U.S. Treasuries are more volatile than gold. It's something that has not been seen for the last 45 years. So naturally, it makes gold a lot more appealing. We know one of the big reasons that we've seen gold buying so much in the last few years, especially by central banks and sovereign buyers, is because of what was done when the U.S. froze Russian assets, and everybody said to themselves, I don't want to be next. So they looked at what was liquid, what was easy to transact in, and gold was the answer. So you've got, these last two bars are 2022 and 2023. That's over 1,000 tons, which is about, or 1,080 tons, I believe, in 2022, around 1,037 tons in 2023. That's about a quarter of the annual gold production. So that means 1 out of every 4 ounces of gold was bought by a central bank in the last 2 years. And we haven't seen that pace slow down at all. So there's some really interesting research done by a guy by the name Jan Nieuwenhuis. Hopefully I pronounced that properly. He's with the Gainesville Coins. And he maintains that there's a lot of unreported buying that's being done by China in gold. So official numbers are much lower. I think it's around 200 and some tons by official buying in China. He says it's actually more like 735 tons last year. And by his estimates, Chinese citizens bought 1,400 tons. If you add those two together, you're at 2/3 of global gold production, one country alone. And they just cannot seem to be getting enough of it. And then you've got, not anecdotal, this is true stuff, it's reported. Costco alone is now selling $200 million worth of gold and silver every month. If you do the math on that, a year, that's $2.4 billion. Costco alone, besides of all the other stuff that they sell. So that's impressive. I mean, people are really cluing in. They're realizing that they need to look for a hedge, and there's been nothing better proven for the last several thousand years. So we're in a gold bull market. We know that Jordan talked about that. He made it unequivocal. There are other indicators as well. If you look at gold in multiple currencies, the major currencies around the world, when you see gold hitting new all-time highs in major currencies, you can be quite sure that we are at the start of a new secular bull market. This shows that 6 different currencies where gold has completely broken out. So now let's talk about silver. There's been a clear breakout, technical breakout. If you draw a line from this is not inflation adjusted, obviously, but the 1980 high all the way down to recent levels, silver has clearly broken out from that downward trend line. And if you look just in the last 3 to 4 years, it's been pushing up lately against the $28 to $30 level. It hit that for the first time in mid-2020 in the COVID pandemic. It did that again in early 2021 when we had the silver squeeze. We're pushing up against those levels again now, and that hopefully the third time is the charm. I think that once we get across the $28 to say $30 level, certainly round numbers are psychologically important. I think once we get above 30, that's going to become very quickly a new floor in the silver price, and certainly very, very helpful to miners and explorers' bottom line. So a little bit of market supply-demand fundamentals. Let's get into that. Silver Institute put out its World Silver Survey a few weeks back. Demand for silver is certainly not letting down. It's expected to be 1.2 billion ounces this year, just slightly below the all-time record of 2022, clearly being very, very strongly led by solar. I'll talk about the rate of growth in solar demand in a few more slides, but it's just been off the charts. This is from Bank of America Global Research. They forecast that demand, right now it's about 20% of all the silver supplied every year goes to solar alone, the single largest application for silver. They expect that within the next 3 years, it could reach 35% of all silver supply will actually go to just this one application. And there's a lot of talk, obviously, about China. China controls about 80%, perhaps more, of the world's global manufacturing capacity in solar panels. But India is starting to catch up and really becoming an important market. This shows the growth in India in solar panel manufacturing. Their capacity is expected to triple between 2023 and 2027. Really, really aggressive growth. And here's an interesting, perhaps, reason for at least part of it. There was an announcement not long ago that they are building the world's largest renewable energy park in India. It's in Gujarat state. It's expected to be 5 times the size of Paris. So that's going to require a lot of silver, needless to say. And I think that we've started to see that silver flow into India. In February of this year, 71 million ounces in 1 month alone were imported into India. That represents 2/3 of all of their last year's imports. So chances are some of that's going to this new solar park. And given the growth that is expected in India, we're going to see a lot more of this. It's forecast by the International Energy Agency that India is going to see the largest largest energy demand growth of any country over the next 30 years. So as I say, obviously a lot of eyes are on China for solar, for renewable energy, for energy period, but India's not far behind and certainly growing very quickly. And, there's something called thrifting in solar panels, and that is the amount of silver that goes into each panel. We haven't had any recent data on this. It's been trending downwards, so the manufacturers of solar panels have seen the requirement of silver in each panel drop pretty steadily over the last few years. I suspect the next time we get some concrete data on this, we're going to start to see that trend up, and this is the reason. The most recent technology in solar panels is something called PERC, and that's actually being phased out. So now we've got something called TOPCon, which takes up to 50% more silver per panel. And Bank of America forecasts that by 2026, or is that 2026, they think that it should be about 50% already of solar panels this year are going to have this new technology. And they forecast that by 2026, it's already going to represent 90%. So this takes more silver per panel. So the amount of silver, that's why I'm saying the thrifting is going to have to go into reverse. And the amount of silver going into each panel is going to start to trend upwards. Something that we don't talk about very much, for probably good reason, is that it's almost impossible to get numbers on silver requirements in defense applications. I want to give a little shout out to someone who does some great research in this field, Ryan Blanchette of the Metals Intelligence Desk. And he's looked at this. Again, you've got to make all kinds of assumptions, but the expectation is that one Tomahawk missile takes about 500 ounces of silver. There are all kinds of places within the missile, things like batteries, cells, relays, contact switches. By that estimate, it's probably about 600,000 ounces that are in Tomahawk missiles. Supplies of Tomahawks are now going to allied countries, so they're selling these missiles to others, producing them and selling them. More requirement for silver. Some of the missiles are being upgraded. Then, of course, when you use the missile, you're not recovering that silver. And so roughly, the estimate is that about 500,000 ounces of silver go into just Tomahawk missiles every year. We haven't even accounted for all of the other defense applications, communications, contacts, relays, you name it, communication. It's just everywhere. So again, none of that's reflected in silver consumption. Well, inflation has hit the industry as well. Total costs for silver production are actually up 61%, cash costs. All-in costs are up 25%. And so margins have shrunk by about 30% last year for primary silver miners. Reserves are down. So there's reserve depletion, not being replaced, not finding silver, not bringing it, not proving up the deposits. And then you have M&A that is at its lowest level since 2006. So the Silver Survey expects that silver mine supply is going to be down again this year, and that's despite considerable growth in demand. Once again, this chart I had back in March, and I thought was worth repeating. I've updated it a little bit, but really hits home if you think about how silver forecast, a supply forecast, was expected to be up last year by 2%. It was actually down 1%. Industrial demand was expected to be up 5%. It was revised at 14%. Solar, here's the big one. Solar was forecast to grow by 28%. It grew 64% last year alone. And the supply deficit was supposed to be 142 million ounces. It actually turned out to be 184 million ounces. So the deficits are continuing. The forecasts are for deficits to continue well into the future. There were several charts where I looked at why the silver price looked like it was capped if there was so much demand and this structural deficit. And my theory was that the big industrial consumers were getting it somewhere, and that they were getting it probably from the futures markets that have inventories, from the ETFs that have inventories. And you can see those charts, those inventories have been dropping by about 40% in the last 3 years. Some of the registered inventories, which is actually what's available for delivery, have been dropping by 70%. So that's most likely where the silver has been coming from. This is a bit of an anomaly, apparently, that started to tick up. I think, if anything, this is investment demand probably in the last couple of months. So globally, silver ETFs have seen their holdings. I've seen other numbers that are a little bit different, so take it with a grain of salt. So really, are you positioned for this silver breakout? I'm going to have to step it up a little bit here. Silver stocks are outpacing gold stocks. So this is the SIL to GDX ratio. SIL to GDX. So you've got a triple bottom, which is like a reverse head and shoulders. The neckline shows a clear breakout recently. So that's really interesting. That's good for both silver and gold stocks, but it's certainly very bullish for silver stocks. Then you look at the SILJ to GDXJ, so the juniors, mostly juniors. We've got a double bottom, and we've got a near breakout. So this is going to be very telling. I think that we could probably see this in the next few months. Silver stocks have really been outperforming silver. Silver since late February is up 20%, SIL up 40%, SILJ up 44%, outpacing gold stocks, GDX up 32%, GDXJ up 34%, so the silver stocks have done even better. And some explorers have been just exploding. One in the portfolio is up 167% since then, one is up 67%, one is up 72%, and these are still arguably very cheap, so lots of room to move. This looks back to 2016, the SILJ to silver ratio. In 2016, silver juniors absolutely exploded versus silver. It looks like we may have formed another bottom just recently. If we did, and we get a similar kind of move, then you could be looking at tremendous returns in silver juniors in the next few months. And this is what that looked like back in 2016. So silver was up 40% in about 7 months. Silver medium to larger cap companies were up 240%. Silver juniors were up 340%. So more than 8 times the leverage on silver in early 2016. that kind of sums it up. If you want to get an idea of the whole opportunity in silver, the Great Silver Bull, which I published a couple of years ago, gives you that overview. My newsletter is the only one that's focused exclusively on silver. You can follow that. Silverstockinvestor.com is the best way to track what I'm doing. And if you were not here yesterday, or if you missed it, there's some big news in the precious metals newsletter industry. My partner, Gwen Preston, decided to hang up her hat and is no longer writing the Maven letter. But I'm very happy to say that I have teamed up with Jeff Clark, who is the gold advisor and has a paid service called Pay Dirt Prospector. So he will be taking over Gwen's letter, the Maven letter. For my subscribers, everything will pretty much look the same. No concerns there. Everything will be very smooth. You'll continue to get your letters all the same as prior. If you would like to speak to Jeff after this session, he'll be outside, and you can go up to him and ask him any questions about how the transition is going to take place. And we can assure you we're going to do our best to keep things as smooth as possible, so you get all the info that you've been used to. I'm offering a 30% discount on Silver Stock Investor. If you decide to subscribe for MIF investors, you've got that code at the bottom on the right. And I'm launching a financing service. So this is mainly for accredited investors. If you are interested in financings, they are hard to come by sometimes. They often, in the last couple of months, I've heard multiple times where financings were way oversubscribed. It took a matter of hours in some cases to raise $5-10 million. It's not the case for everyone, but that certainly has been a repeated story. And so hopefully if people are interested, that's a way to get into that space. And I'm offering a sizable discount on the offer for the first 10 subscribers. If you're interested, I've got that link at the bottom, and you can go there and get that deal. That includes the newsletters, Silver Stock Investor newsletters.